Specific stories, and on that front, let's take a look at another one. This company is known for reinventing old paper mills for niche specialty pulp products. Fortress Paper has been downgraded, however, this month by at least 2 analysts after the company announced plans to operate their Thurso, Quebec pulp plant as a swing mill. Is the company changing its strategy? Well, we are now joined by the chairman and CEO of Fortress Paper, Chad Wozenlefkoff, to find out the answer. Chad, great to have you with us today. Thanks so much for joining. And let me ask you first and foremost about the change that was announced as it relates to this particular mill and to change it to a swing mill, in large part because a lot of people had been expecting a different type of growth strategy from you. What's the reasoning and thinking behind this move?
Yeah, for us, the long-term growth strategy remains intact. For that particular mill, we're developing it into a dissolving pulp mill. It'll be a globally competitive producer in that. And again, so long-term, everything is at business as usual. In the short term, we are faced with a few issues. One, the price of dissolving pulp is at a historic low or at trough pricing. And locally, we can sell our NBHK or a paper pulp product at much better pricing than we would receive otherwise. So we're looking to take advantage of that short-term opportunity while still staying on track with our longer-term plans.
Chad, can you talk to us a little bit, though, about what is going on as it relates to the dissolving pulp industry? Because we definitely have seen these prices come down, but there's a real interesting long-term China growth play. So can you walk us through that thinking from a strategy perspective?
Sure. The investment thesis behind it is we have a growing population, people moving up in income status. They're going to eat and require more food, a different caloric intake with more meats and dairies, etc., putting pressure on agricultural land. And we feel the big loser out of all of that is going to be cotton. It's an aggressive user of herbicides, fertilizers, pesticides, and water. And, of course, people are going to be more interested in being fed than clothed as these populations grow. So if cotton can't keep up, but people will keep buying more textiles, we feel dissolving pulp, which is the main raw material to make rayon or viscose, will be the big winner out of all of this. Rayon and viscose has been designed and modified to basically replicate all the best aspects of cotton.
Chad, I guess a lot of people, though, would be wondering, what's the time frame that people really have to be thinking about and get their head around for that investment thesis to play out in their favor, in your favor? Because that's what is in part at issue here. The other side of the argument, of course, is that it seems as though there's quite a bit of supply in the marketplace. That's why the prices are lower. So how do you respond to both of those aspects?
Yeah, cotton, the supply shock went through cotton in 2010 and in 2011. With that, prices escalated quite a bit. The underlying dissolving pulp, where we're focused, also climbed from about $900 a ton to about $2,700 a ton. While that was not sustainable, it did draw a lot of new entrants into the marketplace, and so a lot of capacity was built. So currently, this overcapacity is being worked through because viscose and rayon is growing at double digits and continuing to do so. As the world economy turns, that is expected to ramp up as well. We feel, according to all our models and all the statistics we have, that sometime in late 2014 or into 2015, that supply-demand paradigm shifts back into the supplier's favor, and we expect to see prices rise materially for dissolving pulp at that point.
So it sounds as though the swing mill is probably going to be at its current state, producing its current product for another year or so. Is that right?
We actually feel longer term, or medium term, I guess, the paper pulp industry, and NBHK, which is the pulp we would be producing there, has a lot of capacity also coming online at the end of 2014. So this strategy really is for the next probably 3 to 6 months. Of course, we're going to remain flexible and nimble and just go in the direction which offers us the best margins at that particular time.
Chad, can we talk about the other side of your business? You've got 2 very distinct businesses here. How is the other one looking right now? It seems as though those results have been better than we've seen over the past 2 years. What's going on there? What's the latest update?
Yeah, so that's our banknote or security mill based in Switzerland. It had 2 challenging years. The first year was due to Greece pulling out of looking to pull out of the Eurozone. Huge change in the exchange rate, and that harmed our cost structure. We became a high-cost producer globally. Now that things are settling down to a certain extent in Europe, we're able to get those margins back up into profitable territory. We had another issue with a large banknote order that was put in abeyance for 6 months. That, too, has resurrected itself. We've now actually fulfilled on that particular banknote order and had follow-up orders. Waste rates continue to come down, productivity going up. So again, we're in positive EBITDA territory from a day-to-day operational point of view there now.
Chad, when you speak to institutional clients, money managers, hedge funds that might be looking at your stock, your company, what's your main message to them, and where do you think there might be a little bit of a disconnect in terms of their understanding of your story and the investment theme here?
Yeah, I think the biggest challenge we face right now when talking to institutional investors, they like the story. When they run their models and numbers, I think they come up with a very attractive valuation. They have a lot of confidence in our team that we can put together good and attractive, unique opportunities. Probably the biggest challenge we face right now is we have two very large, overhanging, uncertain events that we've been dealing with for the last 6 months or so. One is we have a second pulp mill we're looking to convert. It'll cost hundreds of millions of dollars to go through this conversion. Still putting the final pieces together, and with that there's a real uncertainty of how to evaluate our company. Are we going to have double or more the dissolving pulp going forward, or are we only going to have one mill and a lot larger cash on our balance sheet? The other uncertainty is an anti-dumping investigation that's ongoing by the Chinese. It's impacting all the Canadian, U.S. and Brazilian dissolving pulp companies. We keep hearing rumors that announcements or results could come out by November, but again, with that kind of uncertainty, investors are sort of sitting on the sidelines and waiting for some more clarity. And then we can, model properly of where we're going to go and grow the company.
So how do you give them confidence to step in and buy the stock now, or do you?
I think the valuation, gets to a certain point where you just have to step in. Uncertainty or not, I think it's all built into the stock price at this point in the valuation.
Chad, we will leave it there. Thank you so much for all of your information, telling us about your story.
Great.
Thank you. That was Chad Wozo-Lenkov, Chairman and Chief Executive Officer of Fortress Paper. Well, coming up, it is small